Hey, good morning, guys. It is taking a look at the opening action in Europe on MarketStream. That's what time it is on July 11th, 2017. And you're watching MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. We have, let's just say, a mixed market to say the least. Taking a look at the overall European markets. The sentiment right now across the board is flat to uncertain. Taking a look at FEZ, and in full disclosure, I do have clients exposed to large cap stocks in Europe. You can use ETFs or indices to gain that exposure, and that's why I talk about them. FEZ is one that tracks large cap stocks. The reason why I'm attracted to Europe and right now some of these regional ETFs is because they have some volatility, and that's what's been non-existent in this market. FEZ is running in an implied volatility rank of 42. For those of you out there that are like, what is he talking about? I'm shutting off. I don't understand what he's saying. Don't. Wait, let me tell you. The implied volatility rank is a great tool because it gives you an expectation if the market could potentially move either violently up or down. The higher that implied volatility rank, the higher the probability that that could occur. Now, knowing that and hearing that it's at a 42, it's basically right below the mid-level. Once you start getting north of 50 on IV rank, that means that you have the potential for movement. To put this in context, right now the S&P 500, a major index here in the United States, you've heard of it, or the Dow Jones, you've heard of that as well, the Dow Jones Industrial Average, those all have an implied volatility rank of somewhere between 7 and 8. So this gives you context. That's why there's a lot of movement towards this market. This market, though, in Europe has been trending in a very tight range. You hear the bell go off here in the States. So FEZ is trading at 38.65. Watch this one, pricing in about a 1.5% range in the underlying. We'll see how that trades, up 9 cents right now on the opening here in the States. Looking at the UK, trading to the downside today. Had some earnings results that has impacted retail. Marks & Spencer came out. They had disappointing results on sales. Stocks down 4.9%. That has other retailers under pressure in the UK. You're also seeing that Pearson sold its stake in Random House for $1 billion. You have Pearson down 6.2%. So some also mixed action in mining. Let's watch that here in the States. You could take a look at XME. EWU is the ETF that you can use to track English stocks, that tracks the FTSE. Right now trading down 19 cents. I'm looking at this thing having about a 1.5% range. It's got decent, very low implied volatility, but good volume. So let's see if this retail move and these disappointing earnings numbers. We are walking into an earnings season here in the States, folks. Let's see if that is actually something that we need to keep an eye on. Now, taking a look at France. France has been really the market that's been trading, first of all, to the downside with a little more conviction than the rest of the markets in Europe. The French CAC is down 11 right now, mid-session. You can see it's below the 20 and 50-day moving average. For those of you that are new, I use those moving averages as just giving me context on who is in control. And right now, the bulls on the short term and intermediate term have lost control in France. Now, it has firmed up and stayed in a very tight consolidative range. Trading to the downside today, well, right now I think that EWQ, though, has the biggest potential to move violently out of all of the European indices. Why do I say that? Nothing more than I look at the implied volatility rank at 39, and that's the highest one on the continent. There's about a 2% range being priced in over the next 10 days. You have autos right now like Renaults and Peugeots that are up, and finance that's down. You have a flat euro, so if the euro starts to strengthen up, that could put some more pressure on the markets. EWQ is an ETF that you can use. It's trading right now here in the States, just opened up 9 cents. Trading in that what I call battle zone between the 20 and 50-day moving average, the 20 and 50-day moving average again. sitting on intermediate term support, but broke through short term support. So clearly the bulls right now in France are under pressure, but need to show some conviction if the upside is going to continue. Interesting action in Germany. Germany right now, the DAX is trading up 28. What's interesting here is low implied volatility, so not a heightened expectation of big violent moves. Even though about 10 days ago, we saw some big pullbacks in the German markets, have been seeing some interesting action. Autos are up right now. You have also steel names up in Germany. You do have, though, large cap names like SAP and Merck. They're on the downside. We're going to watch that very closely. But you can see that for overall, the German markets have stayed strong, but the bulls have been knocked on their heels. They need to get through this level here of right around basically 12,500 and let's just say 50. So 12,550. That is going to be a critical level to get through, break, and then catalyze the upside if you're going to stay bullish in Germany. Currently, right now, EWG is the ETF you can use here to monitor as well as potentially add exposure to the largest market in Europe. Right now, I don't expect anything more than about a 1.5% range in this underlying over the next 10 days. So that gets you to next Friday. I'm also seeing with the flat euro and low implied volatilities at this juncture that there's not going to be big, violent moves. You see, it's all grindy, and that's what that IV rank tells me is don't have any heightened expectation that there could be huge, violent moves. At least that's not what's anticipated. Now, are we a headline away from something happening? Of course, but that gives you context. All right, folks, that is it right now. We'll see you back here at MarketStream.live.